Welcome to the New School. What we wanted to do was talk about the concept of authenticity and vulnerability in an industry that has typically been super buttoned up, super professional, and a little bit old school.
Hi everyone, and welcome to episode number 5 of the New School Video Podcast. It's Candace, and in this episode, I co-host with Meg as we talk to Seb Dovey, an advisory board member of FiComm. So Seb is a pretty cool dude because not only is he on the advisory board of FiComm, but he serves as a member on boards of directors of all kinds of financial services firms across the globe. He was a co-founding partner along with his wife, Kath, of Scorpio Partnership in 1998. They were later bought out by Aon. I think I'm saying that right. They were focused as a research and insights and management consultancy firm on where the industry was going and what the ultra high net worth client actually wants. In this episode, he talks about where the industry is going. We ask him about a video that we found of him in 2006, where he was talking about the need to go digital, to use social media to grow, and the types of things that probably were a little bit wild at the time. He shares what his experience was like, the surprising insights that they discovered, and where he believes the industry is headed for the future. You don't want to miss it. So Seb, I did some online stalking. I told you that I did. But what I was talking to Meg about when we were prepping for your interview was I found a YouTube video from you that you were in from like 2012, okay? And it's 2020 right now. And in 2012, you were at a conference and you were talking about a human-first approach to financial services. You were talking about how the more high net worth a client becomes, the more digital they become. And you were also talking about how social media was going to be one of the top 3 ways for firms to grow. And so that was in 2012. And I said to Meg, I was like, Seb was like, ladies, these things you've been talking about, I've been talking about them for 10 years. What was that like so long ago to already have seen that? What was the response? And it kind of, at that point, I would imagine, of course, because even now, was very groundbreaking.
What was it like? I'm not sure. I suppose, look, I mean, I think the curse, when you're in a business, the business that we had was a research and consultancy business. It spent its time anthropologically understanding the behaviors of very wealthy people. We had the privilege of being able to look at the responses and understand what the future looked like. What we learned was that when you tell people of a future, it's quite difficult for them when they're dealing with the present. And what we also learned was that our visions of the future were often many years ahead. And so, well, now we know, I mean, at least 12 years ahead, although a sense of, I think I was doing that type of presentation by early 2006, 7. But the point behind it all was, how did I feel? At times pretty frustrated, because if people had moved then, how fast they're moving now, goodness me. And a few did. I suppose the other challenge is that I did feel often like a lone voice globally. There are very, very few people talking about that type of narrative and, thinking about the ways in which to address it. Most of the time I'd make those sort of speeches and people would just glaze over or say that they just simply didn't believe it was possible that wealthy people would double click, or wealthy people would use the internet in different ways. Wealthy people would want to try before you buy. And look at it now. I mean, Michael Kitcey's now being a sort of goddess about this area. Well, God, I suppose, not goddess, but I think there's many people that now talk about it, and I don't mind. I actually got a thrill out of being a purist and being quite early in the process, and we did well out of that.
I think that today people, advisors, wealth managers would still tell you the same thing that you probably heard back in 2006. I think the majority would say high net worth, ultra high net worth clients, I'm never going to connect with them on social media. It's all about the relationship. It's about how you get into the relationship from a trusted source only. So while I agree with you that, you know, you have the privilege of sort of being ahead of the game and being that lone voice so many years ago, and now there's many more voices, I still think that we have so far to go. And I think that this industry also responds really well to data. And I know that your business that you started with your wife, Kath, Scorpio Partnership, that you eventually sold to Aon, was really about, you worked with some of the largest global wealth managers and financial institutions to help them get into the mind of the ultra high net worth. So when you're talking in 2006 about this human connection and the need to be digital and all of these things, it was backed by data, right?
Yeah, that's right. And, you know, I guess it goes way, way back. So we set the company up in 1998. So almost pre-digital, so an analog environment. And at the time, it was even more basic. We were just saying, look, how can you make decisions on, you know, big commercial decisions at, you know, banks that we worked with around the world based on absolutely no information? And their response was, well, we don't really need the information because we know what the customers want. I mean, it was crazy. It was a really, really peculiar sort of narrative. And I thought it was crazy. And I was a relatively, you know, young, you know, just inexperienced individual. And so was my wife, Kath. And we just thought, well, I know what, we'll go out and ask people, and we'll do that. And we started to do that just on a very, very, what now seems quite crude, but just interview basis. Having been journalists, it wasn't a difficult thing for us to do, to have conversations. Our job, our skill, the skill of all the team that worked for us wasn't to be the people in the front of the screen, but the people to be behind the screen and just get people to talk. So it's kind of weird doing this now, but what you learned from that then led to what we started to talk about very aggressively from the early 2000s, which was evidence-based decision making, which again seems logical now in financial services. I mean, it was logical before, by the way, in other industries. It's just not in financial services. And we're only still probably at the foothills of how we use data to make commercial decisions. And those commercial decisions will affect how we communicate, how we develop, how we put new products in the market, and all those things. So it's very exciting to still, you know, realize I'm not out of date. But it's also a little bit frustrating that, you know, I think we can do a lot more, you know, as a consumer of financial services than what we are doing. But, you know, I guess that's the same in every sector.
I know we want to loop back around to the idea of, you know, commercial. So we're going to come back around to that, but I want to stay on your time at Scorpio Partnership really fast. What was, and I know you did, so, like, the research and insights that were coming out of Scorpio were just incredible. And like I said, you worked with some of the biggest global financial institutions. Do you remember one specific study that Scorpio did that just completely surprised, that the results, the outcomes, the insights just completely surprised you? You thought, wow, like that was not at all what I was expecting to get out of this.
So there was a program of research, I think it might be what you saw on that YouTube video, Candace, which was a program which we invented and then delivered for many years called Future Wealth. So that was a program of understanding the needs of consumers year in, year out. And one, I was very proud of that as an idea and how we executed it. But two was that the thing that came out that I suppose, yeah, it did surprise us. I think we, you know, when you're a questionnaire, you sort of know what you expect the answers to be. But what we found was we were able to correlate very aggressively, very actively, the importance that clients associated in client experience to how they chose financial services firms, and how they compared financial services industry to, you know, the retail sector, the aviation sector, and other brands. So the power of the brand, the power of the experience, really, we now had huge amounts of evidence, huge in relative terms, given where we were, to say to whether it was UBS or Wells Fargo or an IRA in the US, you know, you need to understand that your brand is your sales force, and you need to understand that your customer buys you on the experience. You need to understand that your investment outcomes, your investment solutions, super important, super valuable, are actually, dare I say it, secondary in the buying alchemy. And Now you can imagine how well that went down for many years, but it was an ideology. It was the right one. It is the right one. You can see it being reflected in the way businesses develop and perform now.
Why does financial services have such a tough time believing that a human-centered approach is actually what connects with high net worth clients across the spectrum, and that actually fuels the growth in their firms?
I think in a way, I don't know if they have a tough time with the phrase. I think they're actually very relaxed about saying we're a client-centric business. What they have a tough time with is knowing how to do it, from an execution perspective. And there's a part of that which would be that a lot of the people that run the businesses are very historically sales oriented. Nothing wrong with that, but they'll come from the investment management gene pool and have built portfolio of management solutions and clients, and then one day they become the leader of the business, and they have to look at things that they probably not considered before, like marketing and communication and all the other pieces of running a very good scalable company. And I think they've struggled with that. I think they've struggled with the disciplines and skills that are needed to run what is essentially a consumer business, not an investment business. And those were the kind of observations and cases that we were making worldwide, whether it was in Thailand or Tennessee, for argument's sake. And I think we're still in that today. There are now, the good news is that in the leadership cohort of most wealth firms, there is more evidence that I can see of a more consumer-oriented skill set running consumer businesses rather than just investments. And one thing that people misunderstand about comments that are made by me or maybe by others is that I'm being dismissive about the investment management. I'm not. It's certainly not the case. It's just the scale of responsibility of growing companies in this area has grown from just investments to running a much wider suite of importance. And I'll come on probably to that a bit later on.
So I think that's very true, but I think what I was trying to get at, Seb, maybe is where does authenticity and vulnerability play into this?
Well, I think authenticity has been there. The investment advisor or the RIA, particularly those that were involved with the planning side of it, they would get into the kind of the guts, the emotional EQ of a relationship with a client, and they really know that. I mean, there was a lot of authenticity in the connection between the clients, but it was very binary, in my view, between the advisor and the client, which was, I have an investment service that I need to sell because that's how I'm compensated. Which is fine, but I'm only going to listen to the investment piece. I'm going to listen to the rest of the narrative, but it's going to be to solve an investment outcome. And what I think authenticity has broadened into is clients share today and have today much, much more information. So we're in an information management business and a consumer business, of which investment services is a sort of subset. That is not a popular phrase to say, but I will rather like the YouTube video. Maybe this will be the one, but to sort of 8 years ago. But 8 years from now, I suspect people will be going, what it really is right now is an investment management is not an information management business. Hopefully by then, we'll all be happy. But I can imagine that's going to be what people will say.
We'll make sure that we catalog this so that we can come back to it in 8 years' time and see what it means.
I have lots of things that I write and then I put in sealed envelopes, and I'll put things like to be opened in 9 years' time or 10 years' time. Occasionally, I look at them and go, oh, okay, really? Was I thinking that then?
You do that for real? You do that for real?
No,
where
occasionally.
do you put envelopes in your house?
I used to really like when I was little, but I never received one. But the idea of the message in a bottle, I thought that was extraordinary. This idea that you could write one thing in one time and then see it later and then just be fascinated by either the prescience or the ignorance. That's just me, maybe.
Do you have any examples of clients that you worked with during your time at Scorpio, or just businesses that you consult with or follow now that you think are getting it right from it's a consumer business, this is the information age? Have you seen any examples out there where you look at the business and the brand and you think, yeah, they got it?
In financial services, specifically with the sort of subset of wealth, and this may be embarrass Candace, but we know now. But for probably since about 2012, actually, I used to point out to what was essentially a very small company. And I'd be, he never really knew or understood that I was doing this, but I'd be in, say, Singapore and say, guys, the thing that the company you need to look at, and every time I would say, would be United Capital. And now the reason I was looking at them, and we worked with, one of my largest accounts was SEI, so I spent a lot of time with SEI, and we were obviously very familiar with United Capital. They were, looking at them as a provider. The reason I was interested was, it wasn't so much the underlying execution of the investment solutions. It was the narrative. It was about the narrative of communicating with clients. And it was about there was a confidence, maybe later it became a bit of a swagger, but certainly a confidence around, trusting that the client could, play around with stuff, could be expressive in the financial solutions and test and experiment and give feedback. Whereas everywhere else I saw it, it was quite a rigid experience, and for good reasons maybe, but the industry is very, very nervous about letting the customer, take charge as much. So that was one example. Another example I'll just give to you briefly, and they are the largest global firm in the world for wealth management, was UBS. Because they understood brand much earlier. They understood the execution of the financial planning process. It was a joy to work with them and a whole range of different things over the years. And you could just see it in the numbers, but you could see it also in the client feedback. They were big, but they are very, very good. Different in different markets, of course, but good. So those are two examples, UC and UBS.
I was super excited to work at United Capital when I went to work there. And I don't think people actually know this, but the way I was hired is I went in to go speak. I was working at Mercer Advisors, and I had this very cool COO. And he said to me after his time, he said, Candace, go interview. Go see what's out there. We can create a position for you. Tell us what you want to do. But if you go check out what else is out there. So I said, okay. And I went to United Capital, and I'd seen a video of Joe, and I couldn't quite discern his accent. And I went into HR, and they said, where are you from? Because they looked at my resume, and I said, Zimbabwe. And they said, oh gosh, our CEO is from Zimbabwe. So I said, really? And they said, yeah. They said, you have to meet him. So I said, okay. And we literally stormed his office. He was in the middle of a meeting. And I thought to myself, oh my gosh, this is going to go very well or very badly. And after a series of 10 questions, he said, get her in on Monday. And I started, and I didn't have a job description. I didn't really know what I was in for, quite truthfully. But I've never worked at a firm where they do so much in a quarter because everything's so rapid speed. But to Joe's credit and to everyone else's credit, I think the difference that they had was we were all bought into changing the industry, changing the way clients think and feel about money. And I think that's a fundamental point that we are all driving when we're working with our clients. Like, what is your why? How do you connect and align from that? Because once you've got that, everything is kind of secondary. It just flows. And I think things like being the expert and like not taking any feedback in that client advisor relationship, like just disappear, because what you realize is you're there of service, which I think was not traditionally kind of the relationship. It's a much more collaborative of service relationship. And it's kind of like healthcare. Now you don't go to the doctor and just listen. You're now an advocate for yourself in the healthcare dynamic. So I think it's just such a beautiful example. And I think what it lends itself to is there's a certain amount of vulnerability that you have to have in that space of being like, I don't know all the answers. How could I for you? Because it's your life.
Yeah. No, for sure. And I think it's, what I would love to see in this decade is the industry become more trusting of the client. Not the client doesn't quite know what they need, and we're here to tell them. And there's certainly that, but also be trusting of the client to want to experiment with the service, using it in a complex way, but sort of to get them to engage with this topic. I can sort of imagine the meeting that you had with Joe, and just because that just also cascades into the expression of the business. It's like, if we can see something that's, smart and that it's going to help us to do better. Let's start tomorrow. And that was refreshing. It's not let's find a committee and wait for 7 years.
Yeah, I mean, that's where the innovation comes from. I mean, talking about that.
We hired you. I just want to put that one in there. That's why we hired you. Just make that very clear, Candace.
Okay. Seb, I always think it's such a delight. I have the privilege of having a conversation with you twice a month, and it really is a highlight of my life. But you've done so much in your career, and I think that you're very humble about it. You also like to not really, because you've got such big brains and like such different, ideas that are so innovative, you don't really talk about yourself. So Meg and I were like thinking about it before, and we were like, we want Seb to share things. And I think you did share one story, but I'd love for you to share it, like the most vulnerable moment that you've had in your career.
Firstly, I don't think anybody is that interested, but it's very, very kind of you. But I mean, in me, that's it. Interested in general, maybe a different matter. They always used to like to have the information that we had built and the process we had. The most vulnerable for me, I was trying to say when we were talking before the session, was it was at the very beginning. When I came back to my parents and to my mother, and I just said, hey, I think what I'm going to do is I'm going to set up a business. I'm going to go and do that. I couldn't really finish the sentence, because it was an extended sentence, because she burst into tears, and they were tears of disappointment, basically. She was I think her sentence was, why couldn't we join Goldman Sachs and have a proper career? And she was just looking backward and saying, we put a lot of effort, and you have too, in being sort of someone educated and so forth, and now you're going to go and become this crazy thing called a business owner. Or now it's very trendy, obviously. If you say to your parents, I'm going to become an entrepreneur, they actually walk themselves to Goldman Sachs to open an account in anticipation for all the share value you're going to get. So that was pretty hard, because then I finished the sentence, which said, I'm also going to do it with my what I suspect is going to become my life partner. Then she cried even louder. She was like, oh my God, you're going to just destroy everything, not just your own life, but the life of your partner as well. What's her name? So yeah, that's, I don't know if that's vulnerable, but it was certainly entertaining. But what it did do, it did one thing as a business owner, which I often say when I do classes on running companies and so forth, is it instilled in me a conviction to be successful. You have to you have to find a kind of an inner core that goes, this is why I'm doing this. And I suspect many people, I want to prove my parents wrong. And that's the litmus test for a lot of the decision making that happened afterwards. So maybe she was playing me. Who knows? She's passed away now, but you never know.
I love that story, because if I think about the relationship that you and I have as the advisory board member at FiComm and as a female business owner, I face a lot of vulnerability and in my day-to-day and in how I approach my career. And one of the elements of our relationship that has been so empowering for me and for FiComm is that you really help me overcome fear and anxiety and face my vulnerabilities, but face them from a position of power and a position of confidence. That's just really, really empowering. And I know that when you and Kath sold Scorpio Partnership to Aon, and then you stayed on for, I think it was 5 years. And then I met you towards the tail end of that, and we were at a conference, and you mentioned to me very casually when I asked what was going to be next for you. And you said, my wife and I would really like to support businesses that we believe in, and we'd actually really like to support, female business owners. And I was like, hello. I raised my hand, and you were very kind to continue the conversation with me. And so it to me feels just like very natural. It's just Seb. That's how you are. But tell me a little bit about, from your side, like for the boards that you're on, I know that you are on the board of at least two husband and wife teams. I'm not on my wife team here. Scott would not enjoy working with me. But I know that you have F2 and Rydell strategy, and I think your commitment to women business owners is just super cool. Like, what's that look like? What does vulnerability look like from your seat when you're working with businesses like mine?
Well, I guess the reason we do what we do, I say we, and obviously I speak as one of them, but my wife Kath as well, is so we found setting up a business as a partnership and setting up a business as a married partnership, and the industry of financial services simply can't compute that. You're almost odd before you even speak, and so I have some empathy with, if you take that a bit further, women coming into financial services. Before you even do anything, I'm trying to say it's a bit hard to just say you're at a disadvantage. It's not always the case. It's just you're the odd one out, and I guess I've had a very odd one out upbringing, odd one out sort of education, odd one out setting. I've always been in that space, and to navigate being the different one is something that I understand. I express that confidence and comfort to other people. So that's sort of the emotional expression. The other side of it is that 70% of the companies that we back are female-founded companies around the sectors, and the reason is because there's a value there. There's an important role for companies having a more diverse leadership structure, husbands and wives, females only, siblings, and there's a space, and it's actually what I would really like it to be is that they will be irrelevant in the future. We won't be talking about whether it's female only or husband. We're just talking about good businesses. But I know how to find good businesses through that filter. That's the filter I understand. And it also turns out to be the filter that needs a lot of, good support, kind support, not always just cash support, just support. But it's a philosophy. It's not out to make sort of massive fortunes. It's just out to make people make a good business. That's what I like. It comes back to the alchemy piece.
What does the future hold, Seb, as you think about it, and like where financial services is going?
I need to find my white cat so that I can start.
Right. So think about if this was the letter that you're writing to put in one of your envelopes. What have you recently put in there?
Well, I think I've given a little hint of that for the industry, which I think the future holds for our wealth industry, is that wealth firms will recognize that they're information management businesses, and they'll organize themselves accordingly. And they'll organize themselves. What I mean by that is that they will become commercially successful as information management companies, of which investments are an output. I know that most of the time when I say that, people have absolutely no idea what I'm talking about, and I'm quite comfortable with that. I've pretty much said things that people don't understand for decades. So, but it seems to work for me, so that's fine. So that's one. I think another that you'll find as the future holds is that we will find that there will be more sort of empowered businesses. That's a trendy word right now, but businesses that have a more representative leadership structure, more kind of balanced in terms of whether it's by gender, creed, ethnicity, sexuality. It doesn't matter, and they should be irrelevant. But I think you'll see that we'll get through that, and it'll just be differently run businesses. And I'm looking forward to that. I probably won't live long enough to see it, but I think it will come. And so those are two things I have actually written down. The one that I have yet to write down, but I sort of imagine is the future does hold that eventually Tottenham Hotspur will win the Premier League, but that's almost an impossibility. So I might as well just say it and not bother to write it. But
you better go write that down.
That's a football reference, and I mean original football, not this stupid American stuff.
FiComm is a marketing and PR firm, and we've got advisor education. And I think we talk about the new school approach a lot, right? Being more human, being more digital, using marketing to drive commercial success. And we've had a lot of conversations about that. Can you talk a little bit about how you see firms, but specifically marketing and marketing functions, moving away from the CMO role to the chief commercial officer role, and what that means?
And this is, I guess, this is a really central issue to me, because I think if you, again, sort of think about it a little bit historically, the role of the CMO in a wealth business has often been as a sort of second class leadership member. Usually they were the ninth item on a 10-item agenda at the board meeting. And it was sort of the accidental piece. And that's a complete mistake. I mean, like I said, when Megan asked the question, the evidence showed how important brand was, how important client experience was. Those are in the wheelhouse of marketing. Fast forward from 2010 to 2020, we're also beginning to recognize the role of marketing in delivering commercial outcomes. The drivers of value in a relationship, the reasons why people pay. And I think that, I know actually, you'll start to see the emergence of the CMO having much more direct accountability on commercial consequence, commercial outcome. And so, and that's very powerful, because there's more data to track the efforts of the investments that are made. There's more consequence of the efforts and the client experience that lead to outcomes. This isn't new. I've spent most of my time just studying other industries. If you go to the, kind of the FMCG, fast moving consumer goods markets, it's just a simple sort of sector. The CCO is now a very present role in global businesses, and is often originates from a CMO territory. And often, by the way, the CCO becomes the CEO. So I have already started to see some chief commercial officers arrive as a role function within wealth management in the US, in Europe, but it's still one or two, not across the board. But I would be comfortable writing in an unsealed envelope that by 2025, the CCO role will be the hot role in the industry for a lot of reasons that we probably, you'll find better people than me to tell you about. But the bottom line is that every action that you take in a business, and that's speaking as a business owner, founder, every action you take has to have a commercial consequence. And I think sometimes in bigger wealth firms, large employed firms, people sort of lose sight of that. And it's the job of the chief commercial officer to just remind everyone, going, everything we do has to result in a commercial return. Everything. It doesn't matter. You can still be philanthropic, but there has to be a commercial reason. Otherwise, as my first boss said, you're not in a business, you're in a charity.
So we're so aligned with that, and because of the conversations that we have regularly, and when we talk about New School, we talk about leading with authenticity and really targeting your focus and driving to commercial success. And you're always so generous to listen to Candace and I when we've got this passion and these ideas that we're just bursting with. What does New School mean to you, Seb?
So New School to me means that the advisors, the historical epicenter, the crucible of where value transfer happened, those client meetings, is modernizing and understanding to use different forms of engagement to connect with clients. And obviously New School is showing us not just to do it, how the technology helps and how the medium can be used to generate new relationships, but it's more than that. It's also showing to the advisors, I can talk differently, I can connect differently, I can engage differently. And I think that's actually the first building block, right, for New School. It's just teaching people the confidence to express themselves and be commercial online, which I suppose if you think about it sounds a bit crude, but you know what I mean. It's but there's a piece beyond that, which is, I think, if you step out of just the one-to-ones, I would expect that the industry will begin to realize that actually relationship from a client perspective isn't always just in the dialogue with you on screen. I have a relationship with Merrill Lynch, but I can't name the people I deal with. I have a relationship with the brand, the screen, the clicks, and it communicates to me through its marketing, people that might not know, but just the expression of the business. It's the same way as I have a relationship with Amazon. I'll talk about Amazon in the first person, or third person, sorry, and you go, he did this for me. It's like, he doesn't exist. That doesn't exist. There's a body of people behind it. So I think we're beginning to understand in wealth management that we can have an institutionalized relationship. And that, to me, is where New School will go. I believe firmly that the industry is a good industry that does amazing things for amazing people. But it can be a great industry if it also understands that communication and contact and dialogue are not just nice to have, but they're commercially central to everything that we do. And that's not just to argue the case for FiComm. It's been the case that I've argued for 25 years. And I think the industry's come forward. And it's been the case that Megan's argued for at least 20 years. It's not new, but it's becoming more of a tribe than it was. It used to be there were sort of various nomads around the world who would talk about this, and it was no mad. So we were often described as pretty crazy. But no, I think now we're in a good place. But I realize that I'm rambling, and maybe by now everyone's clicked off, so that's okay.
Well, thank you so much for coming on. For everyone that's listening, if you enjoyed this episode, please give us 5 stars on Apple Podcasts. We'd really appreciate that. Share it with anyone that you think would get some value out of it. And again, Seb, thanks for coming on.
Thank you.
Thank you for having me.